Hello everyone, and welcome to our webinar, ESG Investing 101, Making Money While Making a Difference in 2024. My name is Alina, and I'm thrilled to be here with my colleagues Alex and Toby. Today, we'll guide you through the essentials of ESG investing, highlight the latest trends, best practices, and share real-world examples demonstrating how ESG is not just a good initiative but a strategic imperative for modern businesses.
Hi, I am Alex. We'll start by discussing the latest ESG trends in 2024, showing you how the landscape is evolving and why it's more important than ever to integrate ESG principles into your investment strategies.
And I'm Toby. After we cover the trends, we'll dive into best practices for ESG investing and share some powerful real-world examples that illustrate the impact and importance of ESG initiatives.
Let's kick things off with the latest ESG trends. In 2024, we're seeing a significant shift towards greater transparency and accountability. Companies are being more proactive in disclosing their ESG metrics, driven by both regulatory requirements and investor demand. Alex, could you tell us more about this?
Absolutely, Alina. One of the biggest trends we're seeing is the push for standardized ESG reporting frameworks. Investors and stakeholders are calling for more consistent and comparable data, which is leading to the adoption of standards like the Task Force on Climate-Related Financial Disclosures (TCFD) and the Sustainability Accounting Standards Board (SASB). This standardization helps investors make more informed decisions and hold companies accountable for their ESG performance.
That's right, Alex. Another key trend is the increasing focus on social factors, especially in light of the global challenges we've faced recently. Issues like diversity, equity, and inclusion, DEI, employee welfare, and community impact are gaining more attention. Investors are recognizing that companies with strong social practices tend to be more resilient and better positioned for long-term success.
Exactly, Toby. And let's not forget about the environmental aspect. With the growing urgency of climate change, there's a heightened emphasis on investments in renewable energy, carbon reduction technologies, and sustainable resource management. ESG funds that prioritize these areas are attracting a lot of interest in capital.
Moving on to best practices in ESG investing, one of the fundamental principles is thorough due diligence. Investors need to look beyond traditional financial metrics and assess a company's ESG policies, initiatives, and track record. Alex, can you share some insights on how investors can conduct effective ESG due diligence?
Of course, Alina. Effective ESG due diligence involves a multifaceted approach. Investors should start by analyzing ESG reports and ratings from reliable sources. Engaging with companies directly to understand their ESG strategies and future plans is also crucial. Additionally, it's important to consider third-party audits and certifications that verify the authenticity of a company's ESG claims.
Another best practice is to integrate ESG factors into the investment decision-making process. This means incorporating ESG criteria alongside traditional financial analysis to identify companies that are not only financially sound but also sustainable and ethical. Alina, how do you see this integration playing out in investment portfolios?
Great question, Toby. Integration can take several forms. Some investors use a positive screening approach, selecting companies that excel in ESG criteria. Others might opt for an exclusionary strategy, avoiding companies involved in activities deemed harmful, like fossil fuels or tobacco. Additionally, impact investing, where the goal is to generate positive social or environmental impacts alongside financial returns, is gaining traction.
To illustrate the impact of ESG investing, let's look at some real-world examples. One standout case is Unilever. The company has integrated sustainability into its core business strategy, focusing on reducing its environmental footprint and enhancing social impact. This commitment has not only improved its brand reputation, but also driven strong financial performance.
Another great example is Tesla. Beyond its innovative electric vehicles, Tesla is heavily invested in renewable energy solutions, like solar power and battery storage. These initiatives align with global efforts to combat climate change and have positioned Tesla as a leader in both sustainability and profitability.
And let's not overlook Microsoft. The tech giant has set ambitious goals to become carbon negative by 2030 and is investing in a range of sustainability projects, from renewable energy to carbon capture technologies. These efforts not only help the environment but also attract environmentally conscious investors and consumers.
These examples highlight that ESG is not just about doing good, it's a strategic imperative. Companies prioritizing ESG are better equipped to manage risks, seize opportunities, and achieve long-term success. Incorporating ESG factors can lead to more resilient and higher-performing portfolios for investors. Thank you, everyone, for joining us today. We hope this webinar has given you a clear understanding of ESG investing and its importance in today's business landscape. Remember, by integrating ESG principles into your investment strategies, you're not only making a positive impact on society and the environment, but also positioning yourself for better financial returns. We encourage you to stay informed, ask questions, and engage with companies on their ESG practices. Together, we can make a difference while also making smart investment choices. Thanks again for being here. If you have any questions or need further information, please get in touch with us at admin@oculus.com or visit our website to book a consultation at www.oculusgroup.com. Have a great day.